Hello, this is the ChartProfit webcast. Just approaching 3 hours into the trading day on Thursday, the 22nd of October. Just first of all, a reminder, I sent out a link earlier in the week to the OECD Composite Leading Indicators. If you click that link, it launches a flashbook on the ChartProfit site. You can click through the book using the arrows at the top here. Various links on the first page will describe the OECD and what the leading indicators are all about. Worth looking through the book, I think. This from the OECD this month, this CLIs, the Composite Leading Indicators, designed to anticipate turning points in economic activity relative to trend. Their trend is the line which represents 100 on the charts. Shows signs of a moderating growth outlook in most major economies. The CLI for the OECD area as a whole points to growth easing, with a loss of growth momentum anticipated in the United Kingdom and the United States, albeit from relatively high levels. Among the major emerging economies, CLIs continue to point to a loss of growth momentum in China and weak growth momentum in Brazil and Russia. Firming growth is expected in India. So as a whole, looking at the total OECD leading indicator here, here's the what they call the trend line at 100, and the total region there has just dropped below that 100 line. And I just show the graphic with the FTSE All World Index underneath. They're anticipating, as I just mentioned, a loss of growth momentum in the United States here, and also in the United Kingdom. Okay, let's have a look at the pre-open from today. So here we are, pre-open today. Following 2 days of ineffective selling in the middle of last week, buyers auctioned the E-mini higher. Just zoomed out and get a better look of that. Okay, here we had 2 days back over here of ineffective selling in the middle of last week. Buyers then stepped in and auctioned the E-mini higher. Plenty of green here. We came up to this range between 2010 and 2030, and we kind of stalled there with overlapping value areas. As I mentioned, pre-open volume fell off across that period and the value areas narrowed, but the sellers did not make a mark across that period. We saw no red in this area here, and I said pre-open, if significant selling is not marked soon, buyers will likely re-enter, which it looks like they have done actually after the open today. I just want to talk about some of these extra numbers that I've added in here, as much for my benefit as yours. Just want to see over time that by adding this extra information, how much help it actually provides this analysis. I'm quite confident it will. First number that we see day to day is the value area width. So 4.9 is the width. It's actually the height, but we call it the width from here to here. And then the next number is actually expression of how wide that value area is relative to the width of a 20-day average. So this one here at 4.9 is actually 63% narrower, 63% of the width of the average value area over the last 20 days. So in other words, this is a narrow value area. The following day, value area of 5.9 is 55% of the width of the average value area, etc. And a negative 61 there. So we know if we needed telling that these are narrower value areas as we come higher. The next number, the V here, is volume. Similar thing, looks at a 20-day average volume, and this expression here tells us the volume on this day was 25% less than the average volume over the last 20 days. So at this point we can see the value areas are narrowing and the volume is drying. And that went on across here for 3 days. But with no selling being marked here, this just looks like across this period as buyers resting, as I call it. Basically looking to see if there is a response from the sellers. So after 4 days of that's why I said here, if significant selling is not marked soon, buyers will likely re-enter. They'll take confidence from the fact that the sellers were offered opportunity and didn't take it. Okay, these bottom numbers here are just telling me that intraday, who is active. So if we get a plus number here and a plus here, it's indicating that during the day, this Monday, the buyers were active across the profile. Previous day the same. Following day on a Tuesday, it was the sellers who were active, but you'll notice that we just have an overlapping, or actually an inside value area here inside the previous day. So if this is selling, there's no buying composite number for that day. So sellers are active during the day, and yet the value area is overlapping. So their activity is ineffective, which is most likely a short-term positive. The same thing the following day. These numbers indicate quite high selling activity during the day, but again we have more or less an outside or an overlapping value area. Effective selling activity would be these kind of numbers with possibly some red being marked, but the value area actually coming lower and possibly wider. This is all an attempt to answer the two basic questions that I always try to answer for myself. Who is active? Are they effective? So if we look, for instance, back here to Thursday last week, there's quite a high level of buying activity during the day. We had aggressive buying marked at the top here. The value area was relatively wide, and it was actually overlapping but higher. So we'll see how this pans out over time with this extra information. I think the way I'm heading is shorter, more frequent videos, and we'll go into a little more explanation how these numbers can help us. So here we are on the live chart for the E-mini, this being the halfway point down here at 1971, level that we've looked at day to day for quite a while now. So this day here, early October, we found support at that level. We've not really approached it since, and today we're out at a new high for this move since the sharp decline at the end of August there. For a number of days now we've been looking at the pulse chart. Actually, over the last couple of webcasts, we've just talked about the fact that the price momentum has turned positive, heading higher. The breadth turned positive at this point around the 5th of October, and we've seen plenty of effective green coming in, and we've held above this halfway point on the spider here. And as I said last week, much healthier looking pulse chart. Just reviewing this from a couple of weeks ago, the start of October. This is the averaged October Dow in a year ending in 5, and through to about the 10th here on this averaged October, it's fairly flat, and then we do get quite a bullish period from that point to the end of the month. Okay, so here I'm just going to run through some of the key charts that we've talked about. This is IWM Russell 2000 ETF. A couple of interesting things. First of all, the major point of control has just fallen slightly with the recent price activity from 116, which is up here, down to 115.35. It's just done that this week. As you can see, we're currently printing just below that level here. The striking thing about this, about the small caps, is how much they're underperforming their large cap charts. The large caps have recovered the halfway point, which was approximately here for the Russell, and we're kind of up here somewhere. But the Russell has actually had, unlike the large cap indices, this major resistance, which, as I said, has just fallen slightly, but it's approximately here and has been here. At 116, it was up around these highs recently here, and thus far has been unable to overcome this. So we've got quite a divergence here, which is historically and usually considered by most analysis to be not a particularly bullish indication. You usually want to see the small caps performing relatively quite strong in a market which is heading higher. Much better at a minimum if we see this resistance here overcome and some price up here somewhere. So this was one of our key charts, and I'm looking quite broadly across sectors, international indices for important clear levels on all sorts of charts. This is the FTSE 100 index, and the halfway point being here. All the UK indices are doing this, they all share the mid 250. Here's the resistance off that halfway from here to here, and the FTSE still lagging, unable to thus far get above this resistance, unlike some of its European counterparts, which we'll look at. For instance, the France index, we've had this halfway resistance all the way across here, so this was a key chart, as I mentioned last webcast. It just spiked above that today on the back of comments from the ECB, the European Central Bank, hinted at further stimulus for the Eurozone. So we're seeing the German DAX up nearly 2.5%, the CAC up more than 2%. So for instance, France here needs now to hold above this halfway point. Okay, so further positives for the general global equity market would be the UK printing some time above those halfway points. US small caps overcoming their resistance. On the other side of the coin, to show you one of these, this is the Australian All Ordinaries Index. This is actually a monthly chart going way back, 2007 high to low. The obvious resistance at this point here from the rally post 2008, and this halfway point now looking like clear support to the recent decline. Number of charts like this, and in the big global macro view, to my way of looking at things, if we start seeing price printing down here, equities generally are probably at that point in a bear market. So this is the other side of the coin, looking at major support levels. Currently this is holding. This is Australia. I just want to finish with some support charts, as I call them, supporting charts. This is the T-bonds ETF, TLT. I'm saying as long as TLT holds above 121.40, the 12-month point of control, which is here, it's in a pretty good, strong price location. And currently it's holding. Even the minor halfway points, we're actually currently above those levels. There's certainly not a weak chart. The resistance on this chart is from this high to this low, the halfway point here. We briefly spiked above it there and tested it. I'd say TLT is in a pretty strong price location as long as it holds above here. If it could get itself above here, it would be in a very strong price location. GLD, the gold ETF, as we know, long-term downtrend, would be happier to see it above this resistance, which is at 115.12. That would suggest a retest of this high, the 2015 high. Currently in the long term, this is still weak price location. A quick look at oil. This is the oil fund ETF, USO. Looked at this last week. From that low to this high now. Here's the support. We're back there. Price here would indicate a retest. So important chart to watch, along with the crude futures, where the chart looks like this. You can see the support. Again, price here would not be a good sign, I think. Important to watch this. Large cap indices, especially like the FTSE 100, which tends to lag if oil is in a downtrend. So we'll watch these levels. Okay, interesting chart, the dollar index. The 12-month controlling price has moved slightly higher just today, 95.22. That happened overnight. This is now the 12-month. That is now support. Very strong up day, as we know. Over recent months, the dollar index actually correlated to the S&P. So we're seeing a very strong up day for both today, and the obvious resistance now is here, which is the halfway point at 96.5. We're seeing the resistance here and here from that low, this high, this low, this halfway point resistance, and possibly this will come into play over the next couple of days. So price for the dollar index back up here above that level would be a powerful position. And almost the inverse of that, if we look at the Euro FX chart, the 12-month point of control, 113.40. Chart has been unable to build that. We were looking for a higher low above that level, which we haven't seen. And today we're sharply lower, and this is the support on this chart, which comes in just a little lower, around 111 here. Price below this point, and we've already seen support here, just above it here, but price below 111, again in an inverse fashion to the dollar index, would be weak price location, and you'd expect more weakness at that point. As I mentioned last week, the pound against the dollar never really did manage to make much inroads into this major band of resistance up here on the long-term charts. And this is the dollar yen chart, very similar chart. 12-month point of control, we're actually above that now, and the halfway point, as on the other charts, comes into play here, and we know we've already seen that resistance. So again, dollar yen above that level would be strong price location and suggest higher, but this is now the resistance. And just finally, the Aussie dollar. We know this is big support on the chart at this low in September, as discussed previously. The chart would need to do a lot of work upside, needs to get back up here above this major point of control to really put itself in a powerful position. So for months now we've been between these two major levels. Momentum is actually positive at the top here, but has just turned down. Okay, so US large caps having a very good day today on the spider. Further positives would be the supporting charts, key charts, UK charts, and the US small caps. For the long term, would need to see those confirming this breakout on the large caps. Okay, that concludes, and thank you for watching.